What's up everybody, it's Klaus, and in this video I want to go over the possibility of did the stock market hit bottom yet? So before we go into this, need you to do a couple things for me. Please hit the like button below. It helps with the YouTube algorithm. I greatly appreciate it. And also subscribe and hit the notification bell so you will get notifications every time I put out new content like this, which I'm doing a lot more often these days. And follow me on Instagram. I post there pretty much daily, so you will get other aspects of my life as well. And now we are gonna dive right into this. So there's a burning question. Did the stock market hit bottom yet? Now, why is this so important for you, for everyone, for investors? It's because while you can't time the market, I don't believe in that. I don't believe that anyone can time the market. Nobody has a crystal ball. All the greatest minds in the world could never time the market. However, I do believe that there is specific points that you can pick out from other things that have happened, and they're indicators. They're indicators whether the stock market has somewhat got to the bottom yet. Now, we all know that there was a huge drop, so let's go over a little bit of history right now. So up from 2013 to we just saw a massive increase in the stock market up until right about 2017 going into 2018. So in December of 2017 going into 18, I'm a real estate agent that's my expertise. I am a real estate agent in top luxury buildings and top luxury condos that are right outside of New York City, so it's the top of the market. Now, with Trump's tax plan, we saw a drastic decline in there was rates going up, the tax plan, there was multiple things that caused a decrease in the market at that time and in the real estate market as well. So now we go into 2019. 2019 saw a massive increase in the market. So the market dropped it right before 2019. It went way up. You know, there was that trade war issue that was happening right before 2019. And then in 2019, we saw a massive incline into the market, okay? And now we're in 2020, and we are now in this situation with this coronavirus that the market took a huge hit. I don't have to explain that, everyone knows it. It took a huge hit when this came out that it was now in US and there was this massive panic and massive sell-off. Right now, something very, very, very important happened last week. Last week, on Tuesday, I believe it was, the unemployment records came out and there was 3.28 million people in the US that filed for unemployment. And you know what the market did? Absolutely, it did nothing. So this kind of information, it brings up the question, was this already priced in? Was all this bad news priced into the market decline that just happened? It's a good possibility, since a news like this comes out and the market does nothing. In fact, increases last week. So it begs to answer the question, did we hit bottom of the market? It's a very good question, and I will tell you right now the 3 things that I'm doing with my money and with my investments that I believe everyone should do. I'm not a financial advisor, however, I will tell you exactly what I'm doing with my money, and if you think it's good advice, definitely feel free to follow suit. But step 1 that I'm doing with my money right now is keeping much cash reserves. Now, I went over this in a couple videos that I just posted last week. It's talking about my reduced spending, cutting out budget, the things that aren't needed, dividing it up between essentials and non-essential items, going over my finances, and having that emergency fund set aside in cash in an FDIC insured account, checking account, savings account. So what I'm doing now is stockpiling as much in cash. There's 3 things that I'm doing: cash, and putting it there in FDIC insured, savings account, bank account, checking account, and just letting it grow 4 times, that I can pick and choose my investments that I'm going to make over the next couple months. Number 2, real estate. There's a couple things in real estate that I'm doing. So there's Syndicate Investing, which I've just done a deal with that's thankfully going forward still because of this whole situation. Syndicate investing is when you put your money together with a group of investors and they go and either buy a building or build a building, and then is refinanced, and you either get money monthly or it's refinanced, you get your initial investment back plus the interest that you put into it, which I did. And that loan is going through because luckily we started the refinancing process early on this year, and that's going through. So we'll be able to have that investment situated right now, as well as looking at single family, multi-family, 1 to 4 family units that I can get a really good deal on. And I'm only looking at the ones that in this market now that you can get a really, really good deal. Either it's a cash flow or it's an appreciation play for the future in a great area that I think the rents and the price is going to increase. Now, I will say this, I'm being extra careful right now because of the added, in the primary investments that I'm making from a 1 to 4 family, extra careful because of the steep decline in the stock market. There's a possibility that this could have a domino effect going into the real estate market. So if you're in a property in an area right now that the market has greatly increased over the past couple of years, and this hasn't seen such a decline, because right now we've seen a massive decline in the stock market. We haven't seen so much of one in the real estate market. So if you're in an area that is still at the peak and there's not much of a decline that has happened yet, I would be very wary. You do not want to overpay for a property into a property that is in an area that has high rents and really has not seen a drop yet, because we don't know what's going to happen in the future. This could be a domino effect from the stock market now going into and seep into the real estate market because of the snowball effect. So I'm being very careful and only going after the real estate deals. Either it's a syndicate investing job, or, you know, somebody that does a syndicate investing job is Grant Cardone. However, you got to trust the person that you are doing this with. Don't do it with just anyone. I looked into Grant Cardone's thing. I did not feel safe about handing my money to some guy that I've never met, and people are calling me all the time to try to get money from it. It's somebody that I knew, a developer that I knew, that I was introduced to. These happen all over the place. Ask your financial advisor, ask other real estate agents, ask to be introduced and meet someone face to face, know them, and I'm able to go to these properties, and it's not just some property that's bought out in another state somewhere. I'm able to go physically see these properties, was able to give him my money, they built it up, refinanced, and gave it back. So that's a part of syndicate investing. I would just be wary, know who you're dealing with, know the ins and outs of the property. Ideally, know someone else that's going in on it with you that you know and trust. My financial advisor was going in on it with me, so I kind of figured that if he's doing it, it's probably a good situation to do as well. And number 3, stocks. So I'm keeping my war chest aside so that I can look at stocks. The stocks that I have, I just did a video on the top 4 and 5 stocks that I was looking at right now. I'm planning on making another one covering some other stocks, but I'm taking my time with this. And here's my plan with the stock market. First of all, since we don't know if we've hit bottom yet, now it's gone down drastically. Blue chip stocks even have taken a massive, massive hit. I am buying in to the stocks that I feel in the next 2 to 5 years, I can double my money on. I feel like there's a long-term play. I'm not looking at doing this over the next couple months to get to double my money. It's the next 2 to 5 years that I ideally don't want to touch and don't need to touch. And I'm only buying in on red days. So for instance, last week we had 3 straight days of increases. Stay away from it on those. Trust me, it's not gonna keep going up like that. there will be a decrease. Today, I think it's pretty even. It was a decrease, I believe, Friday, but there's red days. Only buy in on your stocks on red days. Don't have that FOMO and that fear of missing out where you think you're just because the stock you were looking at buying had 2 good green days that you're gonna miss out on something you end up buying and now it drops another 10%. It's very volatile right now. Wait till you have red days, and I'm buying in slowly but surely, taking a small position. Say if my position on something was 5 grand that I would like to make on one stock, or 10 grand. That's usually my buy-in on a stock. Now, I'm taking a smaller position these days just because of how volatile the market is. I made the mistake that first week that we had a massive decline, thinking, oh, well now it decreased about 5 days in a row. It's not gonna do it anymore. And then wouldn't you know, come Monday morning, there was pretty much the biggest drop that anyone's seen before the next previous biggest drop from 1987 that week. So I'm taking small positions on red days that if the stock keeps going down, I'm fine with that. I can keep buying in these small positions until I reach, at some point there is going to be a bottom. Now, why I think that we are nearing a bottom is because of a couple things. First, the reason being that we had that news of 3.28 million people. This is the greatest, that is the most increase of unemployment that we have ever seen, and the market did not do anything. That tells me there's gonna be, now there was an inflection point at that turning point where the market started increasing last week. So it's telling me that there's something there, that the bad news did not just drastically decrease the market, which it should have. So it could have been priced in before. That news could have been priced in to the drops that we had before. So that's one key indicator. The next key indicator is that the market volatility is just, there is so much bad news that has already come out that it's almost certain that most of it was priced in. We've gotten so much bad news lately that if, we're likely to have some good news come out, hopefully, let's all hope that there is some good news that comes out, but when we have that good news that comes out, whether there's a vaccine that's on its way, or not as many people, the curve's flattening, and there's not as many people getting the virus, that we are going to see a uptick in the market. And ideally, if things come back in May, hopefully in May, in early May, would definitely make the market rebound, and we wouldn't be, as hurt as we are. So there's a couple key things that I'm looking for with the stock market there, and wondering if we did hit a bottom yet or close to a bottom. Now there's talks of a lot of people saying, it could come in the second week in April, and that's why I suggest buying in small positions now and waiting it out. And then if it keeps dropping, being able to buy in a little bit more and a little bit more, because sooner or later, market's gonna shoot right back up. It always has, and you're gonna be a very happy person. So that's it for today. Those 3 things: cash, real estate, and stocks. And if you like this video, if you like this channel, please subscribe below and hit the notification bell. Also follow me on Instagram. I post there pretty much daily, so you'll find other aspects of my life as well. And have a great day.